All right, everyone. It is 10:25 p.m. here, and we're just gonna go through quickly week ahead video. And as usual, before we go to the week ahead, we will go through some of the a scoop of last week what we had, and we will try to squeeze out some of the information, and then we can try to put it in a way that it can favor us. It can give us some edge to trade. Now, let's start with the 7th of October, Monday. We haven't had uh, much of a data which can give us any kind of a volatility. However, we had some Fed speakers on that day, as you can see from the US side. We had FOMC member Bowman, Kashkari's Muslim, and also I think there were some of other FOMC members we had on Monday, but I can't recall those. Other than that, we haven't had uh, much of the data. Monetary policy meeting minutes we had from Aussie, which clearly didn't give us any new information. They just said that they are not ruling anything in or out. The approach was they said it's gonna be data dependent. So uh, nothing we could have some new information. So pretty much dud. It was a pretty much dud event we had. Moving to the next day, Tuesday. Other than Kiwi official cash rate, uh, we haven't had much from Eurozone area. Nothing from North American side, or even though from Asia Pac side. So let's just focus on the cash rate we had from Reserve Bank of New Zealand. They decreased their policy rate by 50 basis points, and they it the 50 basis point cut was widely expected from the market, so it wasn't anything that surprised the market. So we also had some statements. Just some key points I have wrote down here. First one was uh, the New Zealand is now in a position of excess capacity. Let me just bring that up for you guys. Okay, so it was this article, and the statement summary right here. Low import prices have assisted disinflation. Committee assesses annual CPI within a 1 to 3% target. It is appropriate to cut the OCR by 50 basis points to achieve and maintain low and stable inflation. Other than that, as you can see, it was a pretty much dead events. So we haven't had much to look for. Uh, 50 basis point cuts, it was widely expected, and as the uh, Sheridan stated in the statement. Uh, Now, let's get back to the first factory calendar. Uh, Moving to the next day, again, we just had some Fed speakers, and alongside that, we had FOMC meeting minutes. It was also a nothing burger. We it seemed like we could have some good macro event trading day, but unfortunately we couldn't. The all eyes we had was on inflation reports coming out from US. uh, just take the up from the market expectations, but it's going down from the prior. So 2.4% year of year. And if we go to the timely graph, let me just put it in a line. The direction of the inflation is very much in line. It's heading to the downward, even though it did not give us any sort of a trade, but as because it just came better than expected. However, if we look from a Fed perspective, it is going in the right direction. So with that, we had unemployment claims really surprising the market, 258K. way above than prior. So it was a mixed bag. So we just stayed away from this event. Moving to the last day of the trading session, we had some GDP reports month on month. Also, we had year of year. So, as you guys, as always, free calendars does not provide much of the information on 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 most of the countries. Most data is just provide you limited data. So keep in mind that uh, Canadian employment change, labor data we had. 6.5%, nice numbers there. We know that bank is already very much dovish, and also they are willing to do more if they can, if they see the labor market is deteriorating. However, it's a nice sign that that it is not as bad as it looks like, and with that, I think the bank has more room to go for easy 25 basis points cut, and I don't see a clear jump for 50 basis point cuts. So, uh, just a reminder that these are just my thoughts. So, uh, we will see what the bank will do. To be honest, no one knows. We all, even though the big banks, they just analyze the data, and based on that, they give us some sort of articles stating that this is what they think. But sometimes they also get surprised, so it's not unusual, but that happens. So core PPI, something it comes after CPI, so just uh, just can't give us any sort of volatility because it's coming after the inflation reports. So uh, that I think uh, the inflation expectations from a University of Michigan was the last data we had before the traders goes away from their desks. 2.9% inflation expectations we have here with the consumer sentiment going down from 70.1 to 68.9. So we also had some CPI reports year of year from China, 0.4%, and the last one was 0.6%. The inflation rate in China is really down. We also had some bazooka of stimulus from PBOC. Seems like that the implementation is not getting into the economy right now. We will see what they do to fight the inflation to keep their economy running. So now let's get back to the topic. Week ahead, Sunday, it's a holiday. Monday, Thanksgiving Day. Nothing. We're not gonna have anything on Monday when the central banks are, or let's say if there's a holiday, then you can see a very less or maybe huge moves because there are less participants uh, in front of their desks. So Tuesday is what's gonna get counted as the first day of the trading. We're gonna have some labor data coming out from United Kingdom. Last comments from Governor Bailey was pretty much very dovish, and if we see some further weakness in the labor market, that would really hit the Bank of England, and they will do their job to cut the rate. So pretty much keep an eye, but this data is not as much. The bank is not trusting this data. There are some uh, how I can say that there are some things that the bank don't trust on, so that's why they are trying to build a new system where from they can get more reliable data. So this data it's not reliable, so the bank don't trust it, just solely don't trust on this data. We're gonna have some inflation figures coming out from Canada, uh, something to keep an eye on. Other than that, CPI inflation reports, as I said, the bank just reduced their policy rate by 50 basis point cuts, and also there are I think 84% chances that the bank will do more 150 basis point of cut before the end of this year. So this CPI report will define that is it gonna be easy for the bank to go for 50 basis point cuts, or it's just gonna be another piece of data that will not let them go for 50 basis points of cut. Inflation reports coming out from UK. So the the problem with this data is that from all of these, uh, if I look at the labor, if I look at the at the inflation report, is I'm gonna be on my bed. So it's coming at 3 a.m. I usually don't trade these data because it's way out of my schedule, but it's something I keep an eye on. So a CPI at 2.2 expected is 1.9%. Anything below that can trigger some sell-off in pound, and may can have some good opportunity to short the pound. Moving forward with the labor data to the Aussie side, employment change, unemployment rate we are having from Australia, 4.2 expected as the prior, so something to look. The major events gonna be on Thursday. Widely expected that they're gonna cut by 20 basis, by 25 basis point of cut, and we'll see what they have to say about their forward guidance, what their thoughts on outlook of the economy. Retail sales. There were times when the retail sales weighed so much in the trading session, but not these days. So uh, just something that I don't want to trade. Okay, so other than that, GDP from China, very important, and retail sales from Great Britain pound. So with that said, it's not gonna be that much of the days. We can have some data, but not much. So if you have any questions, don't hesitate to let me know.